It is December 27th, and this is, of course, the video log that takes 30,000 to a million. Oh, it's been a while since I've done one of these. I want to update on the account, and then I'm gonna, of course, talk about the catching of the periodic falling knife that I like to do. There's always a falling knife somewhere for me to catch, apparently. It's part of the way I make money, I guess. Pretty risky. So I'm going to go over the account. I'm going to show you my exact positions, including all the options position, etc. You can feel free to stop the video at any time to try to figure out the exact position of the account. Then I want to talk a little bit about the recent news that came out of China, my opinions on the VIEs, and what I think the Chinese regulators are trying to signal, what I think the future is for the VIEs, and how damn undervalued is VIPS shop. Crazy. So first, let's go into the account, shall we? All right, I'm sitting at 180 and like 600, 700 bucks here. Now, normal positions on the right. If you're interested in the charts, here's the week performance here. I'm actually up a little bit on the week. It's crazy. Month chart down the same amount or a little bit more, and then 3-month is actually positive, and of course the year is positive as well. So 3-month 12,000 divided by 3, 4 grand a month. That's still not bad. It sounds bad when you consider that I opened at 201,000 at one point here in November, this astronomical number, but you know, my Chinese positions found a way to kind of level me out, bring the account in order. So I'm gonna go and list the positions here. Start from the top, and I'm gonna scroll down slowly, and you can stop the video player at any moment to try to figure out the exact positions. This is gonna be the ticker, the stock price, whether it's call or a put, expiration date, number of contracts, whether it's a sell or a buy. You'll see the percentage and the dollar change on the right, and this is a daily change. This is all the way back from yesterday. I was about to say Friday, but I sold one more Apple call. A couple of them expired. I sold some more VIPS puts, of course. Now that's going to be an enormous position. If some of those puts hit, it's going to be crazy. And then I do have one SPY put that's expiring on the January 24th. So if that, I mean, if things come crashing down, at least we'll have some operating cash to buy up any kind of dip in January. And then I've sold some EBIX calls and EBIX puts again, because just the premium on that stock is hilariously large. And maybe I'll talk about that someday too, maybe next time, about premium theory here. I have theories about the premiums. This is the equity positions here. Apple, the big mover, it just keeps climbing up. There's no stopping that company apparently. And then all the rest of the positions are mixed. China's down. The rest of my US positions are up a little bit. Overall, the US market is very good. Chinese market, not good. All the red you see is basically China, and all the green is the US. Story of 2021, right? But, you know, I do think that, I think those are all the positions, yeah. So, I do, let me put this down here. You know, I do think that, oh, check out this mug. S. So, I do think that's going to happen. I think that there's a little bit of reflexivity in the markets, especially when it comes to short term. I don't think short term exaggerations in the market are very sustainable just by nature. So I think that bubbles pop. I think that really big dips get bought up, maybe not to the extent that people expect. I do think that there are legitimate reasons for an index or a stock to just keep drifting down for a very long time. But in the short term, I do think that prices tend to revert to some kind of a mean, at least to an extent. Like how long, I don't know. But I do like to capitalize on that. So seeing that Chinese stocks have corrected by such a dramatic amount, the valuations are crazy. I do think that I can benefit from that somehow. and see if I can buy the dip basically and catch a falling knife. And now I've been bleeding quite a bit for the last 3 months, especially when I started getting more and more into the Chinese game. And it keeps bleeding, and it hurts. Okay, but I do think there's going to be a reversal. I did capitalize on the short reversal we had like a month ago or something, where JD popped up all the way to 90, and then I actually sold a few option calls that I had, and it gave me about $5,000-6,000 of capital that helped me last, and buy up some more shares on the way down here. I also sold some Alibaba shares in favor of leap options. Leap options are long-term options that are like a year or more generally, and hopefully those manifest themselves into something better than just vapor. But so what's going on with the news, right? Well, the Chinese regulators came out, and basically the message that I'm getting is I've read a few reports, a few articles about it, and a few translations, and what I'm getting at, what I'm taking away from this whole story is that they're trying to play ball. They're trying to, say, hey, look, like, we're here to facilitate capital markets. We actually don't like this selling off of Chinese assets to such an extreme level. And they're willing to correct some of the misunderstandings or misjivings, incompatibilities with the US markets and global markets in general. So they're trying to work with global market authorities and standards. How much they're going to be able to do before somebody says no from the top and says that's enough, we don't know. However, the way I'm reading these things, they're willing to even do away with the VIE structure for certain companies, or at least even all companies. I think what the regulators want to do is they want to just make sure that companies get permission and they get registered before they seek funding abroad. I think they do sincerely want for companies to be able to seek funding abroad. However, they just want to make sure that there's nothing wrong with the company leaking out, important data overseas, which is, I guess, understandable. But it sounds like a very, subjective, nitpicky kind of thing. I mean, who knows how stringent these rules are going to be when it comes to determining which companies good to list overseas and which ones got too many state secrets that we don't want to give away to, competing countries or whatever their concern is. My personal opinion, of course, is everything should be open. Like, the most open markets do the best in the long run, and they outpace everybody else. But that's not how dictators like to run their countries usually, which is another thing that people are afraid of. And any kind of rule that you make can be just swiftly changed overnight by a dictator. Like, if you have some kind of other governmental form over a population, then there is more trust by investors, because you know that even if there is a change, it's going to be very well flagged in advance. It's going to be signaled for like a year, 2 or 3, and people are going to have time to readjust their investments, their outlook, the way of doing business. They change their logistics chains or whatever they plan on doing, especially businesses, to kind of mitigate a little bit of the potential shock to the economic system that a specific country or the world could experience as a result of a change. But whenever you have such strong leadership, it's actually a bad thing for, I think, capitalism. But this is just my capitalism theory, okay? It's not so much any based in reality. It's just an opinion. I'm not even an economist, so anyway. So what I was trying to say here is that I think the things are looking up. I mean, if the Chinese regulators actually are trying to work really hard and do away with the VI structure, maybe foreigners would be able to take direct ownership of parts of companies in China, which to this day has not been allowed, right? As per Chinese decree, foreigners are not allowed to own shares of Chinese companies. And there is a signal that they might be actually allowing that in the future. But most investors that are currently invested in China are even okay with the VIE structure. I don't really care about having a direct ownership in the company. Like, what's my voting right going to do? You know, I own like 100 shares of Alibaba. Like, my vote's going to be worth nothing anyways. So, and what do I know about which CEO or whatever they need to appoint, or which CFO? I don't know these people. Like, I can't make any decisions for the company. They need to be making those decisions, not me. I am not a businessman, right? I'm just an investor. So I bet on them, not on myself. As a businessman, I don't know how to run Alibaba. I don't have a clue about what they should be doing next and what they took Alibaba there, not me. You know what I mean? I'm just putting my money behind them. So I really could care less about voting on any of the companies I buy. Even if I have like 51% interest, I don't want to vote, right? I'm going to be the incompetent there. No matter how much I study the business, I didn't take it there. I don't know what's next. I don't know the trajectory as well as the people who actually took it there. Nobody knows that better than them, right? So I'm okay with the VIE structure, personally. And I'm sure everybody who's currently owning any of these Chinese names is okay with it as well. And I think some investors that were okay with it and now are not okay with it, and then in the future will be okay with it again, are going to come back and take a bite of the apple once more. And man, some of these Chinese stocks have been beaten down to pulps. I mean, maybe I should pull up VIPS again, just for a dramatic, like, well, first let's take a look at what my thesis is here for China. So these are basically the retail growth of sales of customer goods. You can see that it's supposedly slowing down, right? But really what you're seeing here is actually an increase year over year of retail sales consumer goods on every single month. Like, there isn't one month in 2021 that was lower than 2020. These are percentages of growth. So what you're seeing there in March and April is just when shopping froze last year in 2020, it just came back to normal levels. So there was a 30%, 33.8% increase in March, and 34.2% in April, and then 17.7%, etc. During those months that everything was just shut down. So nothing was happening anyways. And these are all year over year. So even last year when it increased towards August, September, October, November, to this year, today is better. So what we're going to be seeing is actually an increase of retail sales. Let's see if we can get. We're going to see record-breaking numbers is what I'm trying to get at. And just look at this thing, man. I just can't resist. By the way, you should not do it just because I'm excited about it, right? It's not financial advice. You got to do your own due diligence and research, and your capital is at risk, blah, blah. So this company is just insane. I mean, enterprise value of VIPS Shop is actually $3.46 billion at the moment. $3.46 billion. And they make close to $1 billion in profits per year. Right? So technically, like, EV over profit or earnings is like, well, actually it's right here, it's 3.91. It's under 4. It's under 4. I mean, it's like buying a public business. I understand private business is different, but buying a public business, a retail business, not a seasonal one, right? I mean, it kind of seasonal, but year over year, right? Buying it for $1 million, and it giving you like 200 plus of earnings each year. I mean, that's crazy, right? It's kind of like retiring in the U.S. with a modest, $100,000, and then collecting like 20 plus thousand each year in profit and in salary, right? Like basically if you take all the money out of the business that it earns. I mean, it's just insane. It's insane. That's literally what it is. Like, and you have some, obviously, have some cash, operating cash up top and stuff like that. But 100K, and then you put it into VIPS apparently, and it turns out like $20,000 a year, and you can go like rent a room or something and just live forever, as long as this business sustains. I mean, it's kind of insane. This is very unheard of, especially for a public company like this. You can see the EV over sales is 0.19. So that's incredible, right? So it's more than 5 times over. So if the same company that we bought for $1 million in revenue is $5 million. Now for a public company, like, that's really, really incredible. Let's look at some companies that this company's been compared to, which is, I think, TJ Maxx. I think this is TJX. Let's just briefly look at this thing, okay? So first of all, they're a little bit in debt. They don't have a bunch of cash on the balance books. Now, that's neither negative nor positive, by the way. I mean, it's neither here nor there. It just depends how the business chooses to operate. Now, these guys are paying a dividend, by the way, and their payout ratio is 35%, which is healthy. But let's take a look at these ratios here, okay? So price to earning ratios for TJ Maxx is 35. Well, actually, I don't know if it's just TJ Maxx. Maybe I should have read through the description to see what other companies they own here. Let's find out together, shall we? So TJX, you can see that, okay. Companies, together with subsidiaries of price and of price per home fashion retailer. So Marmax, Home Goods, TJX Canada, and TJX International. Family apparel, blah, blah, blah. Similar products, like discount store. Oh wow, look at this. The revenue dropped quite a bit here in late 2020. I'm sure it rebounded. But we're not even going to check. Okay, we're going to go to the stats. Okay, let's look at the EV stuff. EV to earnings, 35.47. 35.47. It was 3.9 for VIPS. EV to sales is 2.07. Remember what it was on VIPS? Literally 10 times less. More than 10 times less. Okay. More than 10 times less. I understand it's not an online retailer, but what kind of discount online retailer can we compare it to? Let's look at what's another company? I know these are also like what are they called? They're also brick and mortar and stuff, but VIPS also has brick and mortar, by the way. They have physical stores as well. Okay, so this guy's, we're also doing real good here when it comes to the dividend. Look at this payout ratio is almost 19% here, very low. 1% dividend. Okay, let's look. PE ratio, actually, enterprise value 40, market cap 39, so they carry a tiny bit of debt as well. P ratio 25 versus, like 6 or something for VIPS. EV over earnings 25. Okay, right? Or if you remember, VIPS was almost 4, not even 4. It's under 4, so 5 times less. 5 times less. They make 5 times more money based on their enterprise value, based on the price of the business. Okay. Sales 2.21, again more than 6 times. I'm sorry, more than like 11, 12 times. All right. So if you buy this this business for $1 million, the revenue is probably going to be like 400,000 or thereabouts, right? Whereas if you buy VIPS and you pay $1 million, the revenue is not 400,000, right? It's like 5 million. Like what? How is this even possible, right? How is this even possible? The only way, okay, I'm done with this comparison. I'm just done. I just can't handle it anymore. Alright, so the only way, right, that this is possible is like, one, hold on, something's happening. It's happening. Okay. So the only way this is possible, right, is just one, it's a fraud. Like none of this is real. Okay, the numbers are fake. Somebody's fabricating them, whatever, lacking coffee, blah 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 blah. But that's kind of like done with a little bit. I feel like most of the companies are pretty legit. Although that curve for the earnings and revenue is pretty smooth. Like, but I believe it. And there's a possibility. I'm throwing a few percent chance that it's fake. All right. Sorry, one sec. What's another possibility? Well, VIE structures are gone. Well, as we discussed in a previous video, right? VIE structures, even if it's gone, it's just going to trade over the market, right? Over the counter, sorry. It's going to trade OTC. So that's not really an issue. And even if that was not possible, it's going to trade in like Hong Kong or something like that. So that's not a big deal. And then what's another risk? What other risks are there? I don't know. Decree by or further regulation. Well, I mean, I don't know. Are they going to shut down the entire business just because the dictator wants? I mean, just doesn't seem likely. It doesn't make any sense to me. So I'm having a hard time like justifying the risk, you know. Like I understand that there's some risk that all the money will be lost for whatever reason. Slowing down a Chinese economy, okay, fine. But the thing is, even if the Chinese economy slows down further and retail sales drop, like discount stores are the ones that are set up the best to profit from it, especially online ones, right? Where you can get everything really cheap, and you probably don't have to get out of the house, especially with people being fearful nowadays of getting outside, etc. Like I just don't see this not working. And even let's say the business slows down and gets outcompeted by the other Chinese retailers, and discount stores like VIPS are not visited as much anymore. Like let's say they get outcompeted, it's still going to be a slow process, right? The company's still going to return money like over time, and it's going to grow that big cash pile that they have right now, sitting at like $3 billion or something like that. Something it's stupidly insane. I mean, I think they have about $1 billion operating cash, but they have other like cash equivalents sitting on their balance sheets. So it's just really hard for me to see the downside. Like I don't understand why this thing is priced the way it is. And please like talk me out of it. Just keep building a larger and larger position. And at some point, okay, I guess the other risk is that Xi or some other official goes counter to the regulators and looks to actually close foreign investment into China, which is, I guess, another legitimate risk. But I give it like no more than 5% chance of happening. I really don't think China wants to shut itself completely out of the world, especially since that's not the rhetoric that they've been spewing lately and for the past like 20 plus years, by the way. So I can't see that happening. I can't apply like a large probability of that happening. So I'm just befuddled. I don't think the stock is priced accurately, even with the risks. Even if you give 75% chance, right, in my estimation here, even if you give 75% chance total of delisting risk with zero potential, like completely losing your money, right, or the Chinese shut off the markets, or it's a complete fraud and it's worth zero, right? Even if you have 75% chance to lose all your money, like this probably is still a good bet, because the company that you can buy right now for this price is worth like 4 times more. Okay, so you'd be even, basically. You'd be taking a 50-50 chance or something like that. All right, so I don't know what else to say. I mean, you guys please talk me out of it. Like, tell me what the big downsides are besides the ones I listed, and then so hopefully I can reduce my position a little bit, because right now I just keep buying. I think I have like 30 grand in it or something like that. It's crazy. So anyway, I think that's enough rambling for right now. Hopefully you found this entertaining, if not informative or anything like that. I'll try to make another video on next Sunday, or hopefully more often now. Peace.